Good Thursday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It's a pleasure to be with you and a pleasure to be with one of my two co-hosts. Mr. Clark has the afternoon off. Well, he doesn't have it off. He's tied up in meetings. But we do have Mr. Dwight Millard of On Q Home Loans. How are you, my friend?
I'm doing better than you, John. We were talking. Bless your heart, man. I mean, but you've seen this. That's the reason why people gravitate to you. And yeah, I mean, you've seen it. You know how to kind of navigate through it. We like to say everything's new, but I don't know. This is just a reaction mark.
You see a lot of similarities to your point. You see a lot of similarities when you get these big sell-offs like this, that you get to the point, the investor gets to the point, I don't, but you get to the point where you're just mentally exhausted, right? You start the day off down, it gets worse and worse. You get a little rebound, you think, okay, things are calming down, and then the sell-off happens again. And, just over and over and over again throughout the day. And it does, it gets very, very exhausting for investors. And, but you're right. It's I'm glad I have the experience to do this, to lead our team and our clients and so on and so forth, because it would be a scary world out there today. And that kind of tie without someone to talk to about this and try to make sense. Because let me tell you, you and I have chatted about this in the 20 plus years we've been together on this show. And that is the bad news sells, right? I can't imagine, not understanding really the internals of what's going on in the market and just listening to the headlines and everything. You'd be going, oh my God, get me the heck out of here. I'm done. I can't do this. The world's coming to an end and we got a global war going on and, so on and so forth. And, again, you got to just kind of sit back. You got to take a deep breath and you got to listen to the show. I mean, that's the bottom line. That's why we do this each and every day, right?
John, absolutely. And John, do you think that the behavior from the consumer like myself is different? The fear behavior is different than those that are tied to Wall Street. You and
100%.
Yeah. So I'm just 100%. Going, I got to go live my day. I got to go figure out how to get a loan today, right? And how to close loans. Right. So I don't, and I imagine everybody's, so when you see this, for most people, they don't really understand, nor should they get in that sandbox to really understand the get down in the weeds and what's going really on. And that's what your show does is from a level brings it in so you can kind of at least just get what you need to know, That's why you stay up. You probably haven't slept much in the last 10 days. So I mean,
up at 3 every day to stay on top of things. No, you're absolutely right. Well,
I'm in good hands and everybody with you.
You better believe it. Better believe it. I was texting a friend yesterday. He's like, I've been getting some text from various friends, and this one last night. He's like, how you holding up? And I said, piece of cake. We've been here, done that a million times. I said, long hours though, up at 3, and my days have been ending at about 7 o'clock at night, but that's what the clients pay us to do, so they can go live their life like you were saying. And I'm honored to be able to do it. It is an honor to be able to manage people's money and their life savings. And we take it very, very seriously, just like you do with your clients and stuff. So, Dwight, you led perfectly into what we're going to be talking about. And normally, of course, Dwight and Aaron, or Dwight and Corey, we have a real estate topic, of course, each and every Tuesday and Thursday. And we're so grateful for them to do that. But today, because of everything that happened today, Dwight and I felt, let's focus in on you, the investor side. We'll cover the bond market, and Dwight, of course, give us an update on the mortgage side of things. But we're really going to hone today's show down into what we think you are thinking right now, right? You as the investor, what are you thinking right now? I mean, if you just kind of look at the surface, you're probably thinking something like, did I take on too much risk in my portfolio? Is this the start of something bigger? Should I be getting out of the market? Should I be buying more? Right? There's a lot of questions that are going through investors' minds right now, because again, it's a big, scary situation when you turn on the news or turn on your computer and you see, what's going on, obviously with the stock market, but the world side of things. And we're here to just kind of calm things down a little bit and talk through all of these different issues. And again, I don't give out the phone number a lot, but it's always there for you. If you have a question specifically for myself, for Dwight, etc., 852-TALK, 1-800-564-KKOH. We're here for you. We're live. You can ask anything that you want to. So we're going to kind of boil things down into 5 major questions. Should I sell before it gets worse? Is this the start of a bear market? Excuse me. Did I take on too much risk in my portfolio? Should I be buying right now? Right? Just the opposite. And why didn't anyone warn me? Those are the major questions, I think, and Dwight thinks, that are going through investors' minds as we sit right now. And so we're going to try to answer those. And again, if you have any other specific questions, just give us a holler at 852-TALK or 1-564-KKOH. Email's up in front of me. You can send me an email directly if you don't want to get on the phone line, Jon, Jon, at SanchezGaunt, GAUNT.com. And I'll get to it during the show here. So, my friend, let's get the ball rolling here. We've got to go back to this morning, because we had a number of events that unfolded. Now, normally I wait till we get back from the first break to tell you what this market did, but I need to get this going now just so you understand why we're going to kind of progress through the day, because it was a really, really interesting day. The bright side is just kind of a normal, a lot of enthusiasm on the S&P and on the NASDAQ side. The problem was on the Dow Jones Industrial Average side, because you've got some oil producers in there. You've got obviously a vast mixture. That's where the problem was. Give you a little finish on the Dow side of things. We lost 785 on the Dow. That was a 1.61% loss to 47,954. I'm going to give you the NASDAQ and the S&P, and I'm going to come back to the Dow because that really doesn't even tell the whole story of the day. NASDAQ lost 59, just a 0.25%, 22,748. S&P was down 39 points, 0.56%, closing at 6,830. Okay, again, down 38 on the S&P, down 59 on the NASDAQ. Big deal, just kind of a normal day. The worst percentage performer, though, was the Russell 2000, the small caps, right? Those are very sensitive to economic conditions, i.e. interest rates and many other factors. 1.91% loss there, so almost 2%. So, again, the Dow was down 1.61, but that Russell, a 1.91% decline. So that was a tough one. That was a 50-point loss, finished at 2,585. But I got to go back to the Dow side of things today. So this morning, when I did my first stock update at 523 right here, we were down about 260 points. And we kind of hovered there for a little bit. Well, that was at 523. 530, we had some important economic data that came out that all of a sudden accelerated the downside. Now, we were already dealing with some news that there was some problems in regards to the oil prices. We started the day with oil prices moving higher. Then a rumor came out, and again, I have to say it's a rumor because the government has not confirmed this whatsoever. But what the news wires were circulating this morning is that Iran is claiming to have struck a U.S. oil tanker in the Persian Gulf. Again, not confirmed at this point. Now, when they say struck, did they sink it? Did they fire a couple bullets at? We don't know. Dwight, as you know this, when you're in a situation like this, every little bit of negative news can be dramatically magnified, right? Because no one knows, right? You can't get any real accurate data. I was hoping, and I would have thought today, to be honest with you, that the Trump administration, somebody in there, not necessarily Trump, but somebody would have come out today and either confirmed or denied it. I'm worried that they didn't come out and deny it. That tells me, because if you think about it, they've been very forthcoming about all the activity that's been going on over there, right? Remember on, earlier this week, it was a Monday, Tuesday, I'm losing track of the days. When Trump, I think it was Tuesday, when Trump came out and said, hey, look, we're going to start insuring the ships that are going through the Strait of Hormuz, and we're going to provide naval escort, and we're going to do all that. What happened, Dwight? Oil prices came down, stock market rallied. It's that simple. Well, that worries me that we didn't hear anything coming out of the Trump administration today to either confirm or deny that rumor. But that set the stage, Dwight, for oil prices to begin to move up. And boy, did they move up, and they kept moving up. We had a couple little tiny dips, but as oil prices moved up, the stock market, and specifically on the Dow side today, moved down. Here's a little stat for everybody. At our worst level today, we were down 1,111 points on the Dow. Almost 1,200 points. Again, now remember on Monday. So here's a little hint. This seems to be the area, this roughly 1,100 to 1,200 mark. This seems to be where the algorithms are tending to stop at this point, because that's not exactly.
Tuesday, right? Tuesday
Monday.
was the same.
Yeah, Monday.
Well, Tuesday was the same way. Weren't we? We were together on Tuesday. And Tuesday we had it as well, didn't we?
Monday was the big sell-off at the
open. But on Tuesday you had the big dip, and remember we clawed our way back.
Yeah,
right. Yeah, we had the big. You're right. You're right. But I was referring to the, kind of clawing your way back from the big.
Yes, exactly. So when that happened, we went over $6 a barrel on oil when we were down at that low level. What I was really worried about, Dwight, to be honest with you, was that was in the last couple hours of the trading session. So it was around 11, 12 o'clock, right around there. And you don't want to close the day down at that level because that triggers a bunch of selling in the after hour session and then overnight, and then the European and the Asian markets. And you talked about a domino effect. So luckily we did come back a little bit off of that. Like I said, closed down 785 on the Dow. But it was really amazing to watch how this market was so susceptible to every little tick in oil prices. And so we finished the day up $6.27 on oil, 80.97. Here's a little stat for everybody. You're thinking, wow, how long has it been since we've had oil at almost $81 a barrel? We got to go back not too long ago, July of 2024. And that's when the last time we had oil at this level. You're starting to get some analysts coming out, some oil traders coming out and saying $100 oil is baked into the cake. Obviously, we all know, I don't need to bore all of you, but we all know how negative high oil prices are to you and I as a consumer, right? As we discussed the other day on the show, everything we do seems to have some relation to oil, whether it's filling up at the pump or the groceries because they got to be trucked in, and the various products we buy in our lives, etc. So that's how important this is. And so oil, once again, it's been my theme all 4 days on this show, and it's the theme again today. Oil is dominating the headlines. The market is not paying any attention to anything else other than this report that came out in the pre-market session that, again, started to give us that downside momentum. So share with you what that report was as we continue to work our way through what we think are 5 things that are going through your mind right now that we're going to try to help you with. Let's turn it over to Kristen Snow. She's in the Right Now Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard of On Q Home Loans. Again, Aaron has the afternoon off. Your little stat that's just coming across the headlines right now. I was just looking at the futures during the break, not budging much, thank goodness, but we are heading for the worst week since October. So going back a ways. All right. So what we're doing today, again, we're just kind of hitting a lot of different areas. And what we're trying to do is get into your mind a little bit and help you some questions that may be going through your mind. We're trying to get those questions answered. And so once again, if you want to give us a call and say, hey, that's not one of my questions. I got others. Hey, we're sitting right here doing it. Let's do it. 852-TALK. So what are you thinking about in today's sell-off and really this whole week's sell-off? It all started on Monday. But once again, here's how we finished: down 785 on the Dow, 1.61% loss. Again, at our worst level, we're down 1,111. NASDAQ lost 59. The S&P gave up 39. So again, not bad on that side of things. Now let's go back to the commodity side. As I said, $6.27 rise in oil, 80.97 a barrel, highest level since July of 2024. Gold, then no panicking here, Dwight. $54.46 loss, $5,080 an ounce. Here's what Dwight is not smiling about. We're continuing to see these run up in treasuries. Again, opposite as we discussed on Tuesday, opposite of what should be going on in a global war, essentially. Normally, once again, you're going to see the money flow into the bonds. That drives the yields down. We've seen just that opposite happen. Today was no different. 7 basis point increase on the 10-year at a yield of 4.15. And when I tell you about the economic reports, that I'll explain why, once again, this was a day that we saw the bond yields, which again is always a negative for the stock market side, why they rose. But first, Dwight, let's turn it over to you on the mortgage side.
So here's the good news. Here's the good news, John. I'm looking at my notes from Tuesday. We were 6.13 average. We are 6.13 today. So we lost 6 basis points we got improved yesterday based upon, like you were talking about, the news, but we lost it all back. So we're right where we were on Tuesday. That's the good news, but it just feels different right now in the trading, and then the rates and all that just doesn't feel.
What are you seeing? What are you feeling?
When I say that, it feels like there's a more conservative pricing approach. People are not going to get too far out there with good pricing and have to eat something that they didn't want. So I think you're starting to, and I would even imagine tomorrow, even if we're flat, even if we're in the positive, I don't think that they're going to give us much benefit going into a weekend. So much can happen on a weekend. So I think these rates are right here.
Excellent point.
I mean, we're back to we're back above the 6, and it's unfortunate because just a couple of weeks ago we were talking in the side of 6.
Yeah.
Yeah.
What are you hearing from your clients at this point? Any concerns or anything at this point? I mean, luckily this hasn't got to, other than people losing money in their investment accounts.
Right.
This really hasn't got to the consumer side yet. So I'm hoping you're going to say, no, everyone's, still
the activity still, it still feels okay. People are a little nervous about the possibility of rates going up some more than by the time their house gets finished or by the time they get to a point where they can lock. I guess that's just, and again, I guess it's all got, like you said, this whole show dedicated to oil. I mean, so I don't know if that's the end all be all. If, all of a sudden ships can flow and rockets stop flying. Does everything just turn real quick? Yeah.
Yeah, that's the key. That's the key. Because, I was thinking about this last night. If you turn on the news, and all I have on are, financial stations, so I'm not watching Fox or CNN or anything like that. But, when I sit down to have dinner and I'll thumb through the news, etc., there's not a lot of activity. It's not like I saw a stat this morning that I think there's 86% fewer missiles flying today than there was, of course, on Monday. So as a hardworking man or woman out there, you're not seeing it all over the news, right? That's what scares people. They don't see all the action that you and I deal with, dealing with bonds and stocks and so on and so forth. So I'm thinking that, like you said, as long as rates don't really spike up, and they can, and they will, there's no doubt in my mind, quickly reverse if oil prices begin to subside. Hence, back to what I said at the beginning of the show, I was shocked the Trump administration did not come out today and do anything. I thought for sure when oil broke $6 a barrel, again, last couple hours of the trading session, I thought for sure somebody in the White House would have come out and, I mean, Dwight, what's the game that you and I have lived through in all the years that we've been doing this, that the government always does when there's an unusual spike in oil prices? They turn on the nozzle, right? The Strategic Petroleum Reserves, the SPR.
Yeah.
You and I have joked for years. It's nothing. It's like, excuse my French, but like peeing in the wind. It just drops, in the big scheme of things, but it's psychological. It's like, oh, the government's got us. They're going to try to keep these prices down. And, last time they did it, there was no impact. Usually there's no impact. I mean, again, it's nothing. It's nothing in the big scheme of things.
So John, do you think,
but they're not doing anything.
Yeah. Do you think though, that you've said this over the years, that there are certain times, and maybe this isn't one, where investors get an off ramp? Is it an excuse to reshape their portfolio, whatever?
Sure.
Is this one of those moments you could blame it on? Hey, we didn't see this coming. Is this to some people, hey, this was a gift to change up?
Yeah.
I'm saying that right?
No, I get what you're saying. If you go back before Saturday when the missiles flew, we were trading in a lot of choppiness, right? It was like every other day we'd had concerns about AI valuation. Then it was software. Then AI was great. And then software was bad. That had been building things up for quite some time. So this was that little needle that just went into the balloon to let some air out. Has anything fundamentally changed? No. Earnings numbers are great. The economic data is pretty doggone good. The whole issue, we've got to look past these earnings right now because, stocks are being rewarded. I mean, there were some really nice movers today. I was surprised when I went back. I mean, you had ServiceNow up, $6.53, 5 3/4. Intuit had a heck of a day, up a little over 6%, almost $27. Broadcom was up $15. Amazon was up $2.12. I mean, even some of the travel stocks, Expedia, which they just got pounded on Monday. Expedia was up $29.81, 13.44%. Booking Holdings, $359.70 rise, almost 8.5% there.
The consumer's still active.
Exactly. That's my point. The consumer is still active. What was interesting, however, now back to your point of the consumer, we had weakness in, of all things, people may be scratching their head going, well, wait a minute here. And I'll explain why. Walmart down $4.49, 3.5% loss, 123.32. Got a downgrade at Erst Group from a buy rating down to a hold. You had Costco down $24.17, 2.4% loss to 982.57. UPS was down down $6.45 to 104.05. Why is Walmart and Costco down? Exactly what we said in the previous segment. It's going to cost them a lot more money via shipping, via oil, via everything to get their products. Therefore, this is the theory. I'm not saying they're going to do this, but the theory is then of course they're going to have to increase the price of those products because their input costs were higher to get those products onto the shelves. And so therefore, it's going to be bad for earnings. You and I aren't going to shop, and on and on and on.
It feels like we dodged the tariff bullet a little bit. Now I got the oil bullet.
Wait. The what?
Yeah,
the what?
Exactly. Yeah. What happened to the tariff? Now it's all oil.
Yeah. Some are saying
do you think, John, and I don't know if you want to answer, but do you think some of the corporate players take advantage of these little moments?
From what standpoint?
Economics.
To release bad earnings?
No, economics to make more, to use oil as your, because it hasn't made.
Yeah.
Okay.
They will. Luckily, we're almost at the tail end of earnings season. What will be interesting is when, let's say we're in March, so it'll be the second week of April, we'll get first quarter earnings numbers. It'll be interesting at that point if you get some corporations that come out and use that. And a lot of times it's true, but a lot of times it's an excuse of rising oil prices, market turbulence, et cetera. Remember the other famous one that we've dealt with over the years? The currency, right? Oh, the exchange rate is this, so we had to take this big of a hit. And like I said, sometimes it's legitimate, but sometimes it is that excuse. And corporations will do that. They'll know, when they're going to report a bad quarter, and maybe again, just flat out business was slow, but they'll use economic reasons to say, no, this is why our numbers were down. And Wall Street's not stupid. They'll figure that side of it out. All right. When we come back, Dwight, let's get into the economic data, because we were just talking about the rise in bond yields, the rise in mortgage rates, et cetera, all attributed to oil, but there's something deeper that's going on. And I want to explain that. And we got a little hint of it today. And as Dwight somewhat alluded to earlier, we do have the non-farm payroll numbers tomorrow, right? For those that care, I don't know if they're going to get much traction, but Street's predicting whopping 50,000 jobs to have been created. Big deal. Yeah, well, like I said, I don't think that'll be a major issue. All right, we'll continue our discussion on what's on your mind in this market volatile time period that we find ourselves in. Let's turn it over to Jack Saban. He's got news, traffic, and weather. Hey, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Dwight Millard. What are investors thinking during this market sell-off, right? It was a very, very volatile session today. It was a rough one. There was what I like to call some pucker points today when we were down a little over 1,100 points. You hit that, Dwight, and you go, okay, here comes 12. I mean, I was thinking when we hit that 1,100 mark, I'm thinking to myself, when was the last time that we have been down like 2,000? And you have to go back to the COVID, the whole COVID mess when all that started. They would actually, we went a number of days, I can't remember how many exactly now, where they would actually halt the stock market open by 15 minutes because the circuit breakers, what they call the circuit breakers, would trip, and the futures were down so much they had to stop them, and then they would delay the open by usually about 15 minutes to let things kind of calm down. And that didn't help too much. You'd still plunge day after day. It was over 1,000. That was just
so. John, you've seen many years of trading. Do you think they do a great job now? I mean, from, like you said, the stops, and I mean, do you overall think that I do. I think the stock exchanges, the regulators, I think they do a hell of a job. I really do. You look at the amount of volume that goes through, and once again, nowadays it's very, very little human intervention. It's all computers, it's all AI, it's all algorithms, but bottom line, it's all computers. But to think about, again, the billions of shares that trade hands on all the various exchanges, it's amazing to think about too.
It.
And you just
absolutely. So I think they do a really good job. I really do. It's I last time I had any problem, as we were talking about on the show a few weeks ago, that old fat finger trade, whatever year, I forget what year that was, 2010 or something like that, where that wasn't even caused by the exchanges, but things just went haywire and we couldn't get out of trades or out of positions at that point. But since then, it's knock on.
Well, yeah. Just in my time with you saw the great meltdown, in 08, 09.
Sure.
Then you saw that was
but that was very orderly, though. That was very orderly.
No, right? And then you saw the COVID, and now you see the variations of the economic data that comes out that throws the market into turmoil.
Yes,
absolutely. You like to say tantrums at time, and do you think this is a tantrum? Do you think this is a tantrum?
I do. Okay. Yeah, I can't give any of you individual advice. That's why you need to call our office if you're not happy with your advisor or not happy the way your portfolio is performing. We'd love to talk to you. But I'm going to tell you this. These type of situations are some of the best buying opportunities you will ever face, because you get a company that is brought down, or companies that are brought down 5, 10, 15, 20%. There's a lot of companies that are in correction territory. There's a lot of companies that are now in bear market territory, which remember, bear market is whether you're talking the market or you're talking a stock is a 20% decline from its previous high to where it is now. So 20% and more, that stock, for example, is in a bear market. Very easy to happen is because, again, things are moving so fast right now. But if you look back historically, obviously the Gulf War was the biggest of the Middle East conflicts when it came to the market. We made it out of that unscathed. As a matter of fact, again, goes back in history, one of the best buying opportunities we've ever seen. And that's what these tend to be. And I'll tell you, this isn't just Jon Sanchez's opinion. I told everybody, it was a Monday, I had a 5 o'clock webinar, institutional level webinar with one major Wall Street firm, and then one at 8 o'clock, and completely different firms, different styles, but all their analysts and the one firm, well, I'll just say it was JP Morgan. They did an amazing job. It was so impressive. They had market strategists from around the world. I mean, they had one strategist was in Dubai. He was locked down. London. I mean, literally around the world. So that's what you want to hear is you want to hear from the boots on the ground, as I like to call it, Dwight. And what are these men and women hearing and seeing in the countries that they're in? And then they all put their input in, and then then the firm makes a decision where they see things. But the bottom line, they all said the same thing. We don't know where this is going to stop. We don't know where it's going to go. What we do know is it's going to be one hell of a buying opportunity if you have the proper time period, et cetera. They always have been. Does that mean you can go lower after you buy? Of course it does. But when you look back and you go, man, I always wanted to buy, XYZ stock at this price, and look at it, it's 20% lower. Oh, I'm not touching it, right? That's human nature.
Right.
So again, it's the only thing in the world that's when it goes on sale, no one ever wants to touch it. I'm talking the stock.
Well, I think that this is my opinion. I think this is going to go on for a little longer than what most people, I think, would hope or believe. I don't think this is going to be
easier. But let's that's an excellent point you bring up. I'm sorry to cut you off.
No.
Let's go down that path for a second, because what we care about is our listeners, our clients' money, right? Our money. This is why we do this show each and every day. Will it go on for a long time? Absolutely. I said this at the beginning of the week. I don't think the market's going to give a darn when a new regime is brought in or any of these other things. All the market cares about, and therefore all that's moving your portfolio, are really two things. Are we seeing missiles fly on TV? The answer right now is really no. And so that leaves us down to the most important, as you said earlier, it's oil. So I bet my bottom dollar, if 5 minutes from now, the Trump administration comes out and says, we're doing this, 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 and this. We're going to let some oil out of the Strategic Petroleum Reserve. We're going to provide a naval escort. And all of our allies, by the way, are going to help provide a naval escort through the Strait of Hormuz. And we have aircraft hovering above the Strait of Hormuz. And if we see any drones or any rockets being launched, they'll be gone. I mean, you think about it. In one day, we launched something like 2,200 missiles in one day. And so when the Houthis, if you remember back in June, when the Houthis were firing and launching the drones that were hitting some of the merchant ships offshore and even tried hitting our naval ships, as soon as those things are launched, the satellites pick up where they just came from. And then here comes the missiles, and they'll never launch from there again. Not saying there couldn't be miscellaneous ones scattered. But my point is, if I were the president right now, because he watches the stock market, he watches interest rates, I feel it's just about time. I was, again, shocked he didn't do anything today, but tomorrow, if the market is still in turbulence, I would be shocked if you don't hear something from him or someone in his cabinet that does something to calm the fears. Because what happens is investors start to go, well, wait a minute here. We had a big day here. We had a down day there. I'm out of here. And you get days like this where you finish down almost 2%. He can calm that if legitimately he thinks we can calm the oil situation, because no one, Dwight, whether you're talking an institutional investor, a retail investor, or you and I just as John Q. Public, no one benefits from higher oil prices unless you are an investor in a Chevron or an Exxon or one of these companies. It is bad for the global economy. It's bad for the domestic economy. It's bad for everything. So everybody has an incentive in some form or fashion to get these oil prices down, whatever it takes, right? Whatever it takes, they have an incentive to get those prices down. And the president himself, as we saw the other day when he made that announcement, the market just did an immediate U-turn and started heading up when he said they were going to, insure the vessels and the merchant vessels, et cetera. So it's in his realm to be able to do it.
And I guess that's the good news, John, is that this turbulence can smooth out real fast.
It can.
Real fast.
Yeah. And I kind of got sidetracked. My point is, Dwight, to what you said, if something is said, done, or whatever to calm oil prices, frankly, investors around the world, they don't care what's going to happen with the Iranian government. They don't care. The bulk of the bombing is done. So now what does an investor have to be worried about, right? But they do have to worry about oil because it impacts them and the portfolio. And are you still running out on the final segment?
Yeah, I think so. Yeah.
Okay. So let me squeeze this in because I want you to mention this. So here's the other issue that we dealt with today. We had at 5:30 this morning, we had preliminary. So these aren't the final numbers. We'll get the final numbers in a couple weeks. We had preliminary fourth quarter productivity numbers come in. So this measures, again, productivity in the nation's factories and things. This was, again, fourth quarter prelim. So if we go back to third quarter, productivity had increased 5.2% in the third quarter from the second quarter. That was a big increase. Today, fourth quarter productivity up only 2.8%. People aren't working hard, right? Make it real simple. But here's the downside. Unit labor costs rose 2.8%. Wall Street was looking for a 2%. So now you have factory production, et cetera, coming down, but yet you have, as a business, unit labor costs going through the roof. Bad combination. So Dwight, the reason I wanted to squeeze that in before you left, that's why your bond yields shot up today and your mortgage rates, you're pretty lucky there, is because, once again, fear of inflation. These type of reports are not conducive for Kevin Warsh if he gets nominated by the Senate. The type of reports are not conducive for him to be able to come out and go, boom, day one, I'm cutting interest rates when you get these type of high inflation. And reports.
To your point, no matter even how influential Trump wants to be, it just doesn't make it a good recipe to start lowering rates when you just really don't have the goods there.
Yeah, absolutely. Absolutely. So there's that. You got to run. You got an event to go to. I appreciate you so much joining me. Throw out your phone number, my friend.
Yeah.
Dwight Millard on Q Home Loans. Thank you, buddy.
Right,
see you on Tuesday.
John.
All right. I'll be back with everybody right after this break. Let's turn it over to Kristen Snow, right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Again, Mr. Millard had to head off to a meeting, so I will wrap things up. Once again, if you just joined us, 785 loss on the Dow today. Worst level, we were down about 1,100 plus points. NASDAQ gave up 59. No big deal. S&P lower by 39. No big deal there either. Just taking a quick glance into the pre-market session. We actually, at this moment, again, futures just started trading at 3. We actually are positive by 61 on the Dow futures, up 13 on the NASDAQs, and the S&P higher by 5 at this point. Speaking of which, it was, as we wrapped up that last segment with Dwight, and I was saying, these type of global issues many times create some of the best buying opportunities that some of you will see in your lifetime, probably at least for the year. So what do you do, right? How do you do this? Dollar cost average. That's the key. Little bit of money. Again, let's say you got 10 grand sitting in cash. Take 1,000, buy a stock or a portion of a stock. Take another 1,000, buy another one, or add it to that one. So again, dollar cost averaging, where you're just buying on these increments. But the mental side of this, folks, when you get into these market turbulent time periods, your mental thought process absolutely changes, because instead of you going, oh my God, the Dow's down, 800 points and the NASDAQ is down, and you're going, no, baby, drop. I want to be able to buy this thing cheaper. And it's a great mental stimulus for you. You completely change the way that you are looking at the market, because you want to buy shares cheaper than, of course, when they're very expensive. So this is my best advice to you out of everything I've been telling you this week. This is the time that you do that. Again, we're not talking money that you need in 3 months or 6 months. We're talking money that you're going to need 2, 3, 5 years, if not longer, down the road. These are some of these great opportunities that you always hear your friends talk about at the barbecue on Saturday and say, oh yeah, I bought, XYZ at this price, and look at it now. And you're like, man, how did he know to do that? He didn't know. He just bought it when things were down. And that's your opportunity to do something like this at this point. So to kind of wrap things up, should I sell before it gets worse? Again, this is the number one emotional reaction in sell-offs. Panic selling versus disciplined strategy. Historical perspective, markets correct regularly. I always remind everybody, this is really what we've done, what we've given up so far this year. I mean, this is really, at least at this point, this is really nothing out of the norm. It really isn't. I mean, we just have this big theme, of course, that that things are down because of the missiles flying. But historically, this is just really, like I said, part of every year. Even in very good years, we see things like this happen. Just to give you a perspective on a year-to-date basis, we got the Russell 2000s, the best, still up 4.2% for the year. The S&P, folks, is only down 0.2%. Dow's only down 0.2%. The Nasdaq's only down 2.1%. So see, after all this volatility, it's just, again, kind of a normal year. Take a deep breath. Look at it as a buying opportunity. So should I sell before it gets worse? That's up to you. You always have to factor in taxes and all kinds of other considerations. I'm on the other side. I'm a buyer. Is this the start of a bear market? It could be. We got a long ways to go before a bear market. So remember, a pullback is 5 to 10% decline off of a high. A correction is 10% or more coming off of a high. And as I said earlier, the bear market is 20%. Are there some stocks in these territories? Absolutely. But as far as the overall market, no, don't see that at all. Did you take on too much risk? I always remind investors, when things are volatile like this, you do a self-analysis. Are you sleeping at night? Is everything okay? If not, you need to assess your risk. And then again, should I be buying right now? You just heard me say I would. Dollar cost averaging, long-term investing, rebalancing. Are you in the right areas? So on and so forth. Why didn't anybody warn me? Well, no one knew exactly. We knew this was going to happen at some point. We saw the naval buildup. We just didn't know when. And a lot of times it's just kind of a bluff. Like I said, I would not worry about it at this point. I would turn my thought process around. I'd become optimistic and not pessimistic. Ride this thing out, and you will be very, very happy that you did. I'm going to wrap up with this. Market volatility exposes weakness in every portfolio, whether it's a retail level portfolio or an institutional like ours. If today's sell-off or the sell-offs over the last few days are making you nervous, again, that's a signal that you need to listen to, that maybe you're taking on more risk than you realize. We decided we're going to offer a complimentary portfolio stress test for the listeners of the Jon Sanchez Show. Just give our office a call, 775-800-1801, or go online and make the appointment, sanchez.com, and we'll give you a free analysis. We'll tell you where the risk is at this point, and if it's too much, we'll tell you. If it's just right, we'll tell you. And if we can help you, we'll tell you. But do something. Do something. Buy or get an analysis done. God bless. Thanks so much for joining me. That was a lot of fun today. Let's hope for calmer markets tomorrow. We'll be back with you then. Take care.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Dwight Millard, NMLS ID number 241259, a licensed mortgage loan officer with Highlands Residential Mortgage Limited, an equal housing lender. NMLS ID number 134871. The information shared on this live broadcast is for general information purposes only and does not constitute financial or mortgage advice. Listeners should consult directly with a licensed mortgage professional for guidance tailored to their specific situation. All loans are subject to credit approval and program guidelines. Not all applicants will qualify. Loan terms and availability may vary by state and are subject to change without notice. Highlands Residential Mortgage Limited is licensed in multiple states. For a full list of state licenses and disclosures, please visit https://www.highlandsmortgage.com/licenses/. The views expressed during this program are their own and do not necessarily reflect those of Highlands Residential Mortgage Limited.